Hey, what's up everybody? Just wanted to make a little shameless plug here in the beginning of the video for my service. It's $100 for an hour. It's a Zoom call. You can record the call. I go over all of the details of my strategy that have made me over $300,000 so far. And if that's something you're interested in, link will be in the description. Thanks and enjoy the video. Hey everybody, here with my monthly recap of September. Wanted to talk about this month, $29,600. Overall, a great month. I mean, I had some difficulties with the chop and just kind of market conditions changing. As far as it seems like a lot of the plays are setting up differently. They're forming differently. The scales, the timing of the TA is forming differently. And so I've had to adjust to that. And it definitely gave me some hard times. And in fact, I had one of my worst weeks of the entire year during September. And so I kind of want to talk about that. I believe it's the 14th through the 18th. So yes, this was by far one of the toughest weeks I've had to go through for 2020, and I had my worst red day of my career during this week, which was a $3,000 red day, which, you know, that's tough. It's tough to have a 3K red day and then show up the next day and just keep trading like nothing ever happened. It is tough mentally, and so the key is you want to show up the next day, kind of just, you want to erase that 3K day from your mind. You want to just show up to make good trades. I did size down. You know, that's something I always do when I take an unexpected large red day. I always come back with smaller size and just trade to make good trades until I make that 3,000 back, and then I start to scale up, or kind of, you know, that gets my confidence back and kind of gives me the okay to start sizing up again. And this is just a measure of control that I use so that I don't spiral out of control. The most dangerous thing in trading is chasing losses. If you become emotional and start chasing the money that you have lost in the short term, it can turn a slip up into it can turn it into something so much more than just a slip up. It can turn it into destroying months of hard work and effort just because you mentally lose it. And I think it's important to understand how, you know, the mental side of trading, how crucial it is that you have kind of these processes to control your own mentality. It's a fragile thing, and if you think that you always have control and think that you can't lose it, you might be at risk of losing it. All I'm trying to say is just be conscious that a mentality for anybody can be compromised, and that you might want to have different size down measures in place if anything goes wrong until you get that money back. Alright, so let's see. Went on a bit of a tangent there, but you know what? Coming back from that 2K week, I just, again, small size, adjusted to the choppy market, locked in fast profits, and just not going for anything crazy for right now, which I'm alright with. I don't want to go for any home runs right now. I don't feel like the market condition is really that great for it. Now, don't get me wrong, some of the moves have been insane lately. You're looking at SPI, it went from $1 to 45 in one day. Incredible moves are happening. Don't get me wrong. It's just that they haven't been forming, or haven't necessarily been as predictable as what I'm used to. And so that's really what it comes down to. The moves are just occurring a little bit differently. It just seems to be a little harder to predict, and it's harder to get in with size when you have strong conviction. But you know what? I'm working on it. I'm trying to adjust, and I think I will get my size back up as I get more and more comfortable. And you can see that the week after that, 8.1K, which is just incredibly good. Just again, you have a 2K week with your biggest red day of your career, and then the next week you size down, you adjust your strategy, you make 6K, you come back the next week doing the exact same thing with slightly bigger size as the comfort level goes up on 8.2K. So, that's just something to be proud of. As far as myself, I'm very proud. Kind of being able to come back strong like this, and I'm hoping that coming into next week I can continue sizing up and continue adjusting to the different flow of the plays lately, and hopefully I can get some bigger wins. We'll see. Again, I'm going to keep trying to be very safe and just lock in those profits. So let's talk about some plays. Now, this review on these plays are going to be a little different than normal, as far as I want to go over some losses. So on my 3K red day, my first trade of the day was on TCON, and it was an $800 loss, and that really just set up the day for tons of small red trades that added up to 3K. You can see that TCON had been on a huge, just multi-day run, multi-week run, really, from $1.50 or $1.80 to the $5 range. It's starting to get overextended in this range, and some form of resistance in here, and so I was watching it anyways, which was a bit of a mistake on my part. Essentially right in this area, it had this big red day, it recovered, and then I was watching it on this day to see if it could maybe start a squeeze to test 6. Okay, so there's the big red day, there's the recovery. So I was watching it on this day to see if it could have a big squeeze. Now here's the thing, in the morning, if you have a trade idea on the multi-day, you should be prepared for it and ready to take action in the morning at those low price zones that'll give you a safe entry. So, clearly there's this little downtrend at open. It breaks the trend out of that, so this is an appropriate entry around the $5 range, something in here. I would probably just risk $4.95. If I got in at 502, I'd probably risk $4.95. So that's just my strategy. I like to keep the risk extremely tight and get really precise entries so that preferably the price will go up right away, and I'll find the uptrend right away, so I don't have to risk anything on the downside. That's just my preference. Let's see. If I miss that entry, there's also an additional entry here, as it kind of forms this 3-minute, it's like a 3-minute flag setup. You just go ahead and buy the surge up around 517. Again, you just would be risking something like 512. And that, so that's 2 really nice entries. It's just, if I wanted the play, I should have taken it either here or here. But what I ended up doing is I waited too long, and I didn't take action in the morning. And so I was looking at this kind of ascending triangle, but what I failed to really analyze is the fact that the appropriate entries are in the low 5s. Now it's at 550. It's 50 cents up. Not just that, it's very overextended on the multi-day. So if you just take a zoom out here, what is this really, what really is this? And this is essentially just a continuation of this play, which is a dip buy. So it's like a dip buy. It comes up back to kind of, it's very overextended here. And I should have recognized that this is more of a dip buy play rather than a fresh breakout. So I should have definitely been aware of the additional risk involved on this, and the fact that I chased it up 50 cents. That's my own fault. Essentially, I was getting too comfortable with everything just working how I expected it to work. Because really the patterns were pretty straightforward for a while. They were very straightforward, but I remember specifically this week, level 2 was a bit more tricky. The volume, less support on level 2, so it was definitely trickier and more risky. And so I took 2,000 shares at 555. It did give me a push to 570, but the bid support didn't come in, and the bids didn't really stack up the way you would expect it to on a stronger play. And so I kind of just ignored the weakness. And I just sat here for 2 minutes, and I just kind of got way too patient given how overextended this is. This was not safe. First of all, it's an awful entry. And then after it didn't surge and didn't have bid strength, it was pretty awful just to like hang out in this. And when you're completely unaware of the risks that you're taking, and it just starts to sell off, well, you don't really think, you just sell it. Or at least that's in my case. That's my strategy. I always sell it if it breaks my risk. I sell it at market. I don't sit around with a limit order. I just always sell it at market, and usually I get out fine for a small loss. Well, it just so happens this was the case. I got slippage because the bid side was so illiquid, and I got filled at 520. So I lost $800 on this, and it did. It recovered right back to the 550s, and this is a situation where, yes, if I used a limit order, I would have gotten filled and I wouldn't have lost money. But the reason why I use market orders on my sell is because usually it's optimal, because usually I'm not chasing, and usually I'm aware of kind of how risky an entry is, and I was just way too comfortable on this. I blew it. I chased something and didn't even realize I was chasing it. Okay, so I picked an awful entry zone, and that's my fault. That's why the market order worked like crap. It was just an awful play. So an $800 loss basically out the gate, and it threw me off probably mentally. I was just like, damn, that was awful. And I couldn't find my rhythm for the rest of the day. And I continued, I didn't adjust. So this day I did not adjust. I kept using big size. I kept going for stuff when the market was clearly telling me that like things are changing. The patterns are not working how they usually work. And I didn't adjust. So I ended up taking loss after loss. And at the end of the day, I was down $3,000, which was my biggest red day of my career. So, you just, I guess that's an example of what happens when, I don't want to say cocky, but I was doing so well for so long that I kind of forgot what it's like to struggle and to kind of enter spots that just are not safe. And so it was just a wake-up call, and after that day I did adjust, and like I said before, I am proud of myself for how I adjusted. So that was good at least. Did want to point out that the next day, kind of interesting, I didn't play TCON. Basically after that loss, I quit watching it. I was just like, you know what? This ticker's getting me. I'm having a tough time playing it. I'm just going to stop watching it. But it's interesting that the next day it kind of did what I wanted, as far as it was able to kind of recover, hold that breakout range. And it made a nice triangle setup actually into the afternoon, which provided a nice entry zone. And so this one went from 570s to 630. So that was really good. Really good. And after that, pretty much had a big washout. So I guess I bring this up because you can clearly see the difference as far as in the morning I was chasing it and then buying a development that was just way too microscopic, whereas this, it proves itself. It proved it held all day. I mean, this entry is just on a development that took multiple hours. It's just much safer, and it worked much better because of those reasons. So just something to think about. And the other play I would like to go over, so I want to go over SPI. Now this was that big runner from the news. When the news hit, it was around $1.20, and it peaked at $46.50 in one day. Pretty incredible. Probably the biggest percent move I've ever seen in my career, I believe, as far as a one-day move. I could be wrong about that, but just incredible. And what I want to talk about is a play I made on it on the 30th. And again, it is a loss, and I just want to kind of explain how important cutting losses is, because it can completely save you. So I was looking at the multi-day. I was thinking, well, I went from 47. It's kind of sitting in the $8 range. It might be able to have a nice bounce back up to 15. So I was watching it for a bounce play. So on the day of, it was a pre-market runner, and it did form a bounce setup. Okay, so I really like this setup. It just clearly breaks out of this trend. I mean, it's very nice. It breaks out of that trend. 840 entry zone, gives a really nice run to 950. I mean, that's just a great play, and I missed it, and it washed very hard, but it held horizontally all afternoon. So I was kind of thinking, well, it perked, it came all the way down, but it's not cracking, and it's not giving the shorts the crack that they want. What if it just starts to explode up and start to kind of have a big short squeeze for that bigger bounce that I was looking for on the multi-day? And so I was kind of picturing something like this. Something like this is horizontal, and I was looking at this wedge. I was just thinking, well, if it starts to break out, it could just start, exploding. I don't know why I was thinking this. It was very far under VWAP. It was very bearish. It was very bearish. And if you really think about it, if this company is not great and it's just some pump, it's still up from $1.50 to $8. That's still pretty overextended, and they could definitely find more downside. So it's not like it's that safe. So I would say I was kind of trying to force it. I was trying to force a play when I should have just left it, essentially. So, it's kind of interesting, because in this area, I saw a 38,000 bid at 803. And when I saw that large bid pop up, what I did is I took 2,000 shares at 805 wall. And then once the momentum surged and I saw the 805 wall break, I entered 2,000 more shares at 806. So I had 4,000 shares at 805.5, and I did get a nice surge of momentum to 812. But what I noticed is the 38,000 bid that I was using as my kind of support thesis. It either covered the position into this surge, or it was like, or he removed it. They removed it. It could have been a fake bid prop. I'm not sure, but the bid disappeared. And so, kind of on those situations where that bid support disappears on you, it's a red flag as far as it could be a trap. And when it comes to kind of these risky entries for squeezes, when this scenario happens, I don't really think about it. I just cut. I just get out to protect myself, because the play is clearly just broke a trend it should have never broke, and it's just not doing what I wanted. So I cut to protect myself. Let's see. I lost $160 on that. Now, 5 minutes later, they came out with an offering, and it instantly dropped. I don't know. The point I'm trying to make is, like, discipline is everything in trading, and you have to be very specific with what you want and how you want to go about it. And if it doesn't do what you want, don't feel bad about cutting your loss ever, because you never know when the shit's gonna happen. And yeah, this was close. Like, I almost got screwed. So, good reminder for me. I can't be going for speculative bounce plays late day, very far under VWAP, very bearish pattern, overextended on the multi-day. I can't be going for stuff like this. This was way too risky, and quite frankly, I got away with something here. Like, I got lucky. Okay, yes, my discipline and kind of my process, it helped me avoid this, but it doesn't change the fact that I missed a $4,000 loss potentially. I missed that by like a 5-minute window. I mean, it was just way too close, way too close. And if I don't get filled on the way down, it could have potentially been an even bigger loss. So, huge wake-up call. I gotta be more careful, okay? I can't be chasing late day stuff like this, or not chasing, but I can't be going for late day speculative bounce plays. They're risky, and I shouldn't be doing that again. So discipline saves me once again, and a little bit of luck, right? A little bit of luck. So those are the two plays I wanted to talk about: a stupid loss on TCON and a good cut on SPY, and almost the biggest loss of my career. So yeah, so that's pretty much it. If you enjoyed the monthly recap video, you can go ahead and like and subscribe, and I'll see you on the next video. Thanks.